Hello guys, welcome to the 3D market commentary for today. I've just realised my camera is very close to me, so I'm going to move it out of my face. So welcome to the 3D market commentary. My name is Becky. My email address is there, becky@tradictive.com. You've also got support@tradictive.com. So if you have any questions from what you watched today, just send us an email. We're happy to help. Now let's just make sure that we cover the disclaimers, because those obviously need to be covered for legal reasons. They're up there in the top left hand corner, so please give those a read. It's important to understand for legal purposes, but also to understand that these kind of videos are demonstrations. Okay, so 3D market commentary, what is it? Every day we send out an email that has information on 5 major world markets, and we go through the probabilities for each of those markets based on the technology that we use when we trade. So I'll show you that in a minute and I'll explain it. Just before I do so, just to bring you to here, which is tradewithufos.com/Becky. If you're not already a member, you can sign up here, get your free Trade with UFOs membership at the top. Once you've then got that, you'll get the email that I'm about to go through. You'll also get recordings of sessions that we do and reminders of sessions that we do. You'll be able to, from this link, book one-on-one coaching with me if you'd like to. But the most important bit is that you can come down here on this link and ask a question publicly, and then that way I can answer it publicly. So everybody can see the questions and answers and all learn from the same place. So please use that link if you're comfortable to, tradewithufos.com/Becky, and post your questions there. Or if not, of course, you can always email me. Okay, so let's have a look at our 3D market commentary. So let's bring this up. There we are. So on the left, this is the email that we send out that has information on 5 major world markets. If I scroll down, you'll see them one after the other. Of course, correlates to market data. So we do these videos in the mornings US time to go through this and just expand on what we've put in the email, why we've put it in the email, and show you on the charts what we're talking about. Now we call it a 3D approach because we look at 3 separate elements per market. Makes sense, right? 3D. So the first thing that we want to know is upcoming market direction, market climate, meaning where are the probabilities? Are the probabilities up and therefore we should probably buy? Are the probabilities down and therefore we should probably sell? Or do we not have enough probabilities either way, in which case we move on, we don't do anything? We use an app to help us with this. Everything we do is using technology to help us with the answers to these questions. So we use this app down here. It's called AutoClimate. It's a free app on most platforms you can use it on. And what AutoClimate does is it scans through market data and comes back and tells us where the probabilities lie. So for example, if we have a thick blue dot, like one of those, that tells us we have probability upwards. By the way, ignore the lines, just look at the dots. Thick blue dot, probability upwards. If it's a thick red dot, like one of these, probability downwards. If it's a thin dot of either colour, say one of these or one of these, then not enough probabilities, do nothing. So it's very simple. We use the technology to help us decide whether or not we're going to buy, sell or do nothing by figuring out where the probabilities lie and using the technology to show us that. So that's the first thing we're going to look at per market. Then we'll look at unfilled orders, UFOs. So what these show us is essentially where are the buyers and where are the sellers. That's important to know because if we want to buy, we're better off buying with loads of other buyers because it's more likely to push price upwards, which is what you want if you're buying. If we're selling, we want to sell with loads of other sellers because it's much more likely to push price down, which is what you want when you're selling. So again, we use an app to help us with this. We use a piece of technology that again scans through data on the charts, looks at other things as well, and comes back and says to us, hey, these are where the buyers are, these are where the sellers are. If it's a green UFO like one of these, that tells us that's where the buyers are. If it's a red UFO like one of these, that tells us where the sellers are. And it even gives us the prices over here on the right hand side, tells us where between which prices we have these stacks of buyers and stacks of sellers. So we want to look at that per market as well. And then the last thing we look at is volatility, meaning how quickly can we expect these markets to move. That gives us an idea of risk and reward available. So let's look at that per market. Now each of the markets we're looking at daily charts, which means we are looking at one time frame, we're looking at the daily chart. Different things happen on different time frames. So if you trade much smaller time frames or much bigger time frames, of course things will be different. What we're looking at the moment is data relevant to the daily charts. Now what we're looking at as well is the futures for each of these markets. Now futures are basically a representation of things. So in this example, the first one we're looking at here the S&P 500, which is the top 500 US stocks, and we're looking at the ES, which is the representation of that. Overall, if you don't understand what I just said, we're looking at US stocks, basically. That's what we're looking at. So with US stocks at the moment, we have a confirmed upwards climate. We have a thick blue dot here on our auto climate. That tells us probability upwards. We also have stats here that tell us that usually this market would go up for 8.81 candles. I'm going to round that up to 9, just because you can't really have a fraction of a candle. So round it up to 9. Normally goes up for 9 candles. We're on candle number 5. That tells us that we still have movement to the upside. We still have room to the upside based on what usually happens. Now, of course, we can fall short of what normally happens. We can go past what normally happens. That's kind of how you end up with an average in the middle. But if we know that it's falling short at the moment of what usually happens, that gives us more probability that it does continue. So that's on our side there. We also have buy orders here at 44.40.50 to 43.47.75. That's where we have our closest stack of buy orders beneath us, and we have no sell orders above us. So overall, lots of things pointing to upwards trajectory here for the S&P. Now, obviously bear in mind, I'm talking about probabilities and statistical likelihoods. I'm not talking about what is definite or what is guaranteed. We can't do that ever in life, nor can we do it in the markets. We still need to manage our risk in case we're wrong. You still may add other variables to increase probability here. What we're looking at is using technology to help us at least get an idea of where the probabilities lie before we even start trying to place a trade on that market. So overall probability up here for the S&P. Now with volatility, we would expect movement up or down in 1 year on the S&P of 17.85%. So what that tells us is that in 1 day, we would expect it to move up or down 50.37 points. In a week, it would be 110.89 points up or down. And in a month, 230.83 points up or down. So that's the S&P. Let's move on to the next market, which is crude oil. In the meantime, it says there about educating yourself. We do a whole bunch of courses at really affordable prices, and actually most of them come with 3-month complimentary access to the AutoUFOs and AutoClimate. Now, AutoClimate is a free app on most platforms. You can use it on anyway. AutoUFOs is a paid-for app, and depending on the platform you use, depends on the price. You can just subscribe directly to the AutoUFOs, just get the app. You don't have to do a course at all. You can just subscribe directly to them. But a lot of times, because they come for free for 3 months as part of a course, depending on the cost of the course and which platform you're using, can actually work out cheaper to enroll for a course and you use the UFOs for 3 months than it would be to directly subscribe to them for 3 months, if that makes sense. So check those out depending on what's best for you. Okay, so crude oil, we have an unconfirmed climate. It doesn't matter that it says up, it doesn't matter that it's a blue dot. What matters is that it's a thin dot and it's unconfirmed, meaning we don't have enough probabilities either way. This market doesn't quite know what it's doing yet. And that's okay. That tells us move on, change timeframes, change market. No point looking at a market or trying to analyze a market or place trades on a market that doesn't have clearly defined probabilities. So in this case for crude oil at the moment on a daily chart, not defined in terms of probabilities. Now we do have sell orders up here at 71.96 to 69.19. They've already worked once, pushed price down, twice, pushed price down, and we're now on our way back up to them. Wouldn't be surprised if price were to hit these again that we would see price move back down. So we'll see how that pans out over the next day or so, I would think. Then we have buy orders here, 60.77 to 58.73. Again, they've already worked. Here, price hit them and moved up from there. That's what we expect buy orders to do, is push price up. That's why we want to know where they are. So if price were to come down here and hit these buy orders, we would expect price to go up. But of course, we're way closer to the sell orders right now. So I wouldn't be surprised to see price hit that stack of sell orders and come down. But we'll see. At the moment, for the time being, not enough probabilities either way anyway. In terms of volatility on oil, we'd expect movement up or down in 1 year of 36.33%. That means in a day, movements up or down of 1.57 points. In a week, 3.45 points up or down, and in 1 month, 7.19 points up or down. So again, that tells us probability of the movement up or down there. Okay, moving on to the next market, which is gold. Now it says there about coaching and support. We do a whole bunch of coaching and support for free. We're obviously on YouTube and LinkedIn and Facebook and other places right now. You can access lots of our sessions for free. We also have a closed coaching environment where people pay a small monthly fee to have access to more of our time in a closed environment. But otherwise, like I said, we do a lot of stuff for free anyway. So join us on these sessions if it helps you. So with gold, we have, this is the next market, gold, an unconfirmed climate again, a thin blue dot, not enough probability either way, change market, change time frame. In terms of sell orders, we have sell orders up here at 1866 to 1804.4. Now these have already worked, so they push price down a little bit here, they push price down already here, they've pushed price down a tiny bit so far. So it might be that these sell orders might push price down a little bit further. We have buy orders here at 1759.6 to 1742.6. Those haven't been touched yet. So if price was to be pushed down, we would expect that these buy orders would push them up. For the time being, similar to oil when we looked at that one before, not enough probabilities either way. Therefore, we would move on to a different time frame or a different market. Now, in terms of volatility, we'd expect that in 1 year, gold would move up or down by 16.44%. which means in a day, up or down of 18.59 points, in a week, up or down of 40.93 points, and in 1 month, up or down of 85.2 points. So that's gold. Moving on to the next market, which is the US dollar. Now the US dollar is responsible for 80% of transactions, roughly, worldwide every day. So whether you trade it or not, be aware of it. It will impact pretty much any other market you could be trading. So be aware of it. Now the US dollar, we have a confirmed upwards climate, a thick blue dot here telling us probability is upwards. Now usually the US dollar would go up for 4.82 candles. Let's round that up to 5. Usually goes up for 5 candles. We're on candle number 1. That tells us there's still room for it to move up based on what usually happens. So bear that in mind. We've got probability up there with our climate. Now we have buy orders here at 92.665 to 92.47, and we have sell orders up here at 93.75 to 93.455. At the moment, we're kind of in between them. Based on the volatility, we may hit these buy orders perhaps today. Unlikely, doesn't move very much in a day compared to the other markets. So for the time being, we've got probability up with the climate, but not necessarily close enough to either stack of orders to change anything today. So far, overall probability upwards there with the dollar. Now, in terms of volatility, like I said, it's slightly less than the others. So far, we've looked at sort of 16, 30, 17%. With the US dollar, we expect movement up or down in a year of only 5.35%, which means in 1 day, we would expect movement up or down of 0.31 points. In a week, it would be 0.69 points up or down. And in 1 month, it would be 1.44 points up or down, which is why I'm saying we may hit these orders today, but unlikely based on the movement that we would expect. Okay, let's move on to the last market, which is backed Bitcoin. Now, as I load this, it says here about self-scheduling a clarification call. You can chat to one of our experts about the apps and the courses and the memberships and whatever's going to be useful for you, if anything. You can chat that through with one of our experts by clicking there if you get this email. Okay, so with Bitcoin, interesting situation with Bitcoin. We have, for the first time in a long time now, an unconfirmed climate. We had 20 or so candles to the upside, 20 or so probabilities to the upside day in, day out for the last month, I guess. With Bitcoin, we now have an unconfirmed climate, meaning it's now decided it doesn't know what it's doing. Now, that's not surprising considering we have sell orders right above us, so sellers just here, and we have buyers just here. We've got buyers and sellers overlapping each other a little bit here. So the sellers are from 49,540 to 47,252.5. And then we have buy orders, like I said, literally just beneath us at 47,167.5 to 43,945. Now, where we have sellers and buyers really, really close to each other, they're competing. Whoever is more is going to win in the end. If there are more buyers than sellers, price will go up. If there are more sellers than buyers, price will go down. That's the only way price can move. So, for the time being, we have a situation where the climate doesn't know what it's doing, and we have sellers and buyers overlapping each other. For me, I want to keep out of that and see who's going to win before the probabilities line up, and then I get on board. Otherwise, it's just a gamble. You're picking your favourite side and you've got a 50-50 chance of being right. So to me, again, I would rather not do that. I would rather wait until probabilities line up. So for the time being with Bitcoin, undecided on many points. Now, in terms of volatility, it's more volatile than the others. We'd expect movement up or down in 1 year of 90.34%, which means in a day, up or down of 2,706.16. In a week, 5,957.33 up or down. And in a month, 12,401.17. So that's the movement we would expect on Bitcoin, again, for the time being, undecided. So we've looked at each of those 5 markets now. We've looked at the climate, which is this here, telling us where probabilities lie, up, down, or nowhere. We've looked at our buy and sell UFOs, which tells us where buyers and sellers are that could change what's going on in the market or continue it going in that direction. And we've looked at volatility, how quickly we expect these markets to move within given periods of time. Before we wrap up, let's just look at our weekly economic calendar to just summarize this. We get this from fxstreet.com and we filter by high impact news. Basically, we want to know which news reports that are coming out, that are scheduled to come out, are likely to create a high impact on the markets, meaning are likely to create volatility. Volatility isn't good or bad. It depends how you see it. Volatility just means it moves quicker. So if it's moving quickly and you're on the right side of that, great. If it's moving quickly and you're on the wrong side of that, not so great. So what the weekly economic calendar can do is give us an idea of where we might see that quick movement so that we can then decide as traders based on our risk tolerance what we want to do about that. So today, being Friday, in about an hour or so, we will have some news coming out on the US dollar that could affect US markets and the US dollar, which then by itself can also affect other markets. So if you're trading in the US, or if you're trading the US dollar or US dollar versus other currency pairs, for example, you might want to be aware of that and then decide based on your trader's profile what is best for you to do. So any questions, you can email me, becky@tradictive.com, or there's support@tradictive.com. And as I said at the start, just to remind you again, tradewithufos.com/Becky. Get yourself a free membership at the top if you don't have one already. You'll then get this email that I've just gone through every day. And then you can come down here and ask questions publicly so that I can answer them publicly, and then everybody can learn from this area together. So I will be doing a stock session later on today. So join me there if you're interested in learning about stocks or you're interested in following some new stocks trades. Otherwise, I will see you guys on Monday for the next market commentary. Hope you guys have a great end to your trading week.